2025 and the new market cycle are sharply coming into view. For investment managers like ourselves, 2025 has already begun. So where do we see the best opportunities and challenges for the year ahead? 2024 was the year of elections, with a historic number of voters going to the polls in many countries. But the US election was the one which loomed largest and will likely have the biggest impact on the financial equilibrium globally and real asset sectors moving forward. Donald Trump has yet to take office, but based on his election promises, the makeup of his economic team, and market reactions so far, we see three trends of note which will be influenced by Trump 2.0. Firstly, we expect the dollar to strengthen as a result of President Trump's growth agenda, which is focused on expanding tax cuts, deregulating industries, easing antitrust policies, and boosting energy transition. Secondly, we expect the EU to suffer due to expected trade frictions related to short-term uncertainty over trade policy and the possibility of more imposed tariffs. The UK will probably be less impacted due to a small trade deficit with the US. Finally, Trump 2.0 is likely to be more bad news for the renewable energy sector, with much rhetoric focusing on boosting gas and oil, and the president-elect having once already removed the US from the Paris Climate Agreement. Focusing now on real assets and the sectors and strategies we see faring well in 2025, we again have three takeaways. Firstly, for the real estate sectors, we see the living and logistics sectors continuing to perform strongly on the back of well-established megatrends. Indeed, supply has come down, occupancy rates are high, and demand remains strong for these property types. For us, these two sectors are the drivers of the urban and living transitions. Secondly, value add continues to be the strategy of choice for real estate, particularly in the living sectors, with the need for higher returns demanded by investors, even as interest rates begin their downward trajectory. Finally, infrastructure will continue to take up a larger proportion of investors' portfolios as more decision makers become aware of the strength of the asset class. We continue to prefer mid-market strategies with a focus on the digital and energy transitions. We are really excited to work with our partners and clients in sourcing and executing the right investments along these convictions in 2025.